All right, hang on a second while we take the closing bell here. It is Monday, July 6th, and we want to take a look at what's going on down
let's
there.
take a look at the action today as the market settles in. And it's kind of been an interesting day because we had, 1% or more losses on the S&P and Dow earlier in today's trade, but definitely here at the close, well off their worst levels of the day. In fact, the S&P 500, a gain of about 2 points. The Dow 30, just looking, pretty much closing at its best levels of the day, up about 43 points. That's good for a gain of about 0.5%. But the Nasdaq unable to get out of the red, so closing here down about 9 points or down about 0.5%. About half of the industry groups on the S&P 500 ended the session lower today. Energy and material names were the biggest losers. In fact, the energy group down more than 1%. Materials names declining about 0.6%. Meantime, those consumer staples and healthcare, those defensive plays, once again catching the attention of investors. They were the big winners. Consumer staples up about 1.5% as a group overall. And Matt, you can see those healthcare names up 0.75%.
All right, now stocks ending the day kind of flipped around a little bit, at least for the Dow and the S&P. The Nasdaq still well off its session lows. Lydia Thew is at the New York Stock Exchange with more on today's action. Lydia, what are analysts saying here about S&P valuations, for example?
Well, okay, so that's the next thing definitely to take a look at would be earnings season. But before I even get to that, Matt, I want to talk to you about the fact that we just saw a huge turnaround here in the S&P and the Dow. We started the day with almost all the groups in the S&P 500 lower, and then here you have the defensive groups, primarily healthcare and utilities, really leading the way higher. That said, throughout the day, the main story was definitely the weakness in commodities. So both the commodity prices from oil to nat gas to copper falling. So that was dragging on shares of energy and material stocks, and that stayed true pretty much throughout the day. And then also the shipping companies also seeing weakness as a result of that weakness as well. So that was kind of the main weakness situation. But when it came to the sort of positive news, we had that ISM non-manufacturing report coming in slightly better than expected. We also did have a Treasury tips auction that was very well received with a strong bid to cover ratio. So we saw basically a recovery here in stocks and closing just slightly higher as we close out the session here, very close to the end of the trading session. But basically, Matt, as you said, a mixed trade today, but the focus definitely will be on earnings. Right now we're trading at about 15.1 times forward earnings, Carol, and this is basically the question is it worth owning stocks here, obviously? Well,
Let's talk a little bit more about earnings, because, Lydia, that really does become our focal point. This is a very data-driven market. Analysts, in terms of their expectations, we've been talking about the numbers over the last 60 minutes. I mean, they're not looking for some great things, are they?
No, they're not. Look, they're looking for a 34% drop in S&P earnings for the second quarter. Ex-financials, they're looking at 32.5% drop in earnings for the second quarter. Like I said, Alcoa unofficially kicking off that earnings season on Wednesday. So lots of focus will be there. Tobias Lefkovich over at Citigroup saying that he thinks that stocks are looking to be near fair value. I was talking to John O'Donohue over at Cowen and Company. He was saying that he thinks that actually stocks may be a little bit rich here. He's looking for a valuation, so on forward earnings to be closer to in the 14 times range. So this is, of course, going to be the big question. And then, of course, where are their profits coming from? Are these companies managing to increase their revenues? And, of course, guidance. Those are the things that a lot of analysts say that they are going to be looking